Welcome to the final edition of my weekend market analysis series for August. In today's video, we are diving deep into the XAUUSD market dynamics, providing you with a comprehensive look at what next week might have in store. But before we jump into the outlook, let's rewind and recap the key moments that shaped our trading decisions last week. Remember, after that significant drop from the record high at the $2,532 zone, gold bounced back on Friday as the US dollar and Treasury bond yield plunged after Jerome Powell's, that is the Fed chairman's dovish comments at the Jackson Hole Symposium. The structure you are looking at right in front of you is actually our trading setup prior to the beginning of last week, where we had our key level situating at the $2,475 area. And of course, the fact that price action remained above that structure, we continue to maintain a bullish bias in this market. However, if you zoom into the current structure, you'll see that through the course of last week, we had some buy positions at the beginning of the week, capitalizing on this 320 pips move all the way into that record high at the 2,532. And of course, we saw price break down the $2,500 area temporarily into the key level at the 2,475 with a bearish move of about 230 pips. Then finally, we saw the rebound in the gold prices following that dovish remark from the Fed chairman, bringing price back into the $2,520 area with a 410 pips move. If you are keen on the details for educational purposes, you can find a detailed breakdown of each of our entry points from last week right in the description box of this current video you are watching. During the Jackson Hole Symposium, Powell signaled that the market is receiving clear indications that policy adjustments are on the horizon. However, the extent of rate cut will be dependent on upcoming job data and the Fed's balancing act between inflation and employment. This seems to be a good news for buyers at this particular juncture. And now that all eyes are on the labor market and the August NFP report, will be the final piece of the puzzle in determining the size of the cut. But before that report drops, which is in a couple of weeks from now, what's the path for gold in the coming week? As we head into the last week of August, we've got a few factors to consider: end of month flows, low liquidity, and positioning ahead of September. This can lead to more volatile price swings, as even smaller trades from key players in the market can have a bigger impact in the market. In this video, we will be dissecting the chart, taking all of these factors into account. We will be looking for clues to reveal the market's overall direction, identifying the major trend, pinpointing key levels to watch out for, and exploring structural patterns that could give us a trading edge. Remember, this presentation is for educational purposes only and not financial advice. Trading involves inherent risk, so always consult a financial advisor before making any investment decisions. Now, with the groundwork laid, let's dive right into the business. So, as always, our first point of contact will be on the 4 hours time frame, but I will not be deliberating too long on this, as the structure we have here still remains the same with what we saw during last week's trading session. So you can check my previous video for an overall insight into the structure. So as you will see, if you watch my previous video, you can see it still remains the same. We have an ascending channel in play, further emphasizing the strength of the buyers at this point in time. And of course, we can see how price action through the second half of last week has been trading right around the resistant line of that ascending channel to emphasize how crucial this area is, and it's going to be playing a significant role in determining whether price will continue the uptrend or probably respect the resistant line one more time, pushing price back into the support line. Now, to help us navigate this current market dynamics, we have a simple trading setup that we are going to be using on the lower time frame. But before we delve into the lower time frame, let's turn our focus to the upcoming economic events that could shape market sentiment next week. By reviewing the economic calendar, we can pinpoint how this economic event will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. Now, based on the asset we are looking at for next week, we are going to be focusing on high impactful events from the United States economic docket. Now, the first impactful event for next week will not be coming until Thursday, August 29th, and that is the gross domestic product annualized for quarter two. You see, this data here expressed in annual growth rate measures the total value of goods and services produced by the US economy. And of course, it is considered to be a key indicator of the US economic health, which everyone will be looking forward to guide their trading decisions. Fast forward to Friday, August 30th, we are going to be looking at the core PCE, that is the personal consumption expenditure, a data that measures inflation by tracking prices of goods and services, excluding volatile foods and energy costs. It is usually considered that a higher PCE reading indicates stronger inflation, which can lead to a stronger US dollar as investors seek higher returns in the US economy. So, next week is not really filled with a lot of events to look out for. So, we only have two impactful events. And of course, the anticipation of this event has a way of influencing the sentiment in the market, which will definitely be reflected on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I do have a simple trading setup that will be guiding our trading decisions for next week. Now, after taking into account the character of price action since the beginning of this month of August, that's about 3 to 4 weeks of historical data, it is quite clear that the market is on a bullish trend. Connecting the series of higher lows further emphasize the strength of the buyers, as you will see here. And in fact, I have a couple of ascending trend lines to guide that our decisions next week. However, we are going to be focusing on the main one here, which is this one highlighted in red color. And you know how we treat our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying. Now, in addition to the ascending trend line is our key level, which is situated at the 2,495 area, as you will see right here. And you know, as long as price remains above the structure, we shall continue to maintain a bullish bias, except if the structure is broken to the downside, then we can start considering selling. Now, for the fact that price remains above the structure, I'm looking out for two possibilities here to continue the uptrend move. One of which is a potential retracement back into structure, that is price retracing back into the 2,495 area, which interestingly shares a confluence with that ascending trend line, and this could be as a result of some profit taking activities as market participants await this economic event we talked about earlier. And this could result into this, and if that happens, I will be looking at continued buy pressure around the structure here to continue the uptrend move. And while we're looking out for buying opportunities, it depends on what structure gives us during the early hours of next week. And if it supports us joining that bearish move, we are looking at a minimum of 200 pips to catch there. So we'll also be taking that into consideration as well. Then another thing that could happen here if price does not retrace back into structure is price continue to consolidate for a while where it forms an uptrend continuation pattern like a um, bullish rectangle, pennant structure, or flag pattern, whichever case it may be, then the breakout of the resistance line will welcome more buying opportunities. And of course, if price goes ahead to break out of the all-time record high at the 2,532, we're looking out to add more buy positions to our existing trade. So this is what I will be looking out for to consider buying the XAUUSD next week. However, in as much as we're looking out for buying opportunity, we cannot ignore the potential that sellers could take price through this key level and that's ascending trend line to incite a massive sell-off to the downside. So for me to feel comfortable joining a bearish move for next week, I would rather want to see price break down, retest both the 2,495 and the ascending trend line to join that move to the downside. But trust me, I will be with you in the comment section of this video at the beginning of next week after monitoring the character of price action around this area during the early hours of the week to decide where our next course of action is going to be. So there you have it, our in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thank you for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.